something not a lot of investors know, and that is how to find a growth stock. So some stocks go up enormously, and this is really why some people are in the stock market, to make a lot of money. So if we would look at some of the stocks last year, there would be Pro Medicus, Telix Pharmaceuticals, and what have these stocks got in common? And it is that they would never turn up on any sort of traditional, brainwashed, fundamental, value-based research, because they don't have a PE that looks cheap, and they don't have a yield that looks high. So growth stocks have, you can just ignore the earnings number, because growth stocks are generally companies that are investing in their business. Every dollar they make, not every dollar, but when they make dollars, they put it back into the business in order to grow their business, to establish their foothold on their customer base or in their country for the longer term. So they're investing. You might remember the rally in Afterpay, and it was sitting on a PEs of multiple hundreds because they were spending all their money on building the number of people in their product. And that required an enormous amount of advertising, enormous amount of investment in infrastructure and R&D and investing overseas to expand into the US. So they never really produced an earnings number that made any fundamental analyst say, oh, this is cheap. And the same thing with Pro Medicus, same thing with Telix Pharmaceuticals, very successful stocks last year. Huge share price growth, but no fundamental analyst would ever pick up on it. So how do you find a growth stock? What you do is start to ignore the earnings line and certainly ignore the yield. Any growth stock worth its salt is paying zero dividends. What's the point in paying money back to you when they're getting a high return on equity from investing it in their own business? So look for revenue and revenue growth, and one ratio which is worth picking up on or filtering by, instead of PEs and yields, filter by price to sales. So this is the value of the company and how much revenue it's earning. So you want a high price to sales ratio. You want to see solid earnings growth, which is material relative to the market capitalization. And you want to see revenue growth with no earnings, because they're putting all the money back in. So I've done a list in the newsletter today. Go and have a look in my section. I've done a list in the newsletter today of the stocks in the top 100 that have high price to sales ratios. So it's producing a lot of revenue, but are not producing a lot of earnings yet, because they choose to, because they are spending on product development, R&D, marketing. So go to the newsletter, have a look. You'll see, I'll give you some of them, some of the highest price to sales ratios in the top 100. This company's over 10 billion. They include Pro Medicus, WiseTech, forget the moral issues at WiseTech. We have REA, Technology One, Hub, NetWealth, Zero, NextDC, Telix Pharmaceuticals, Car Group, and then we get into Cochlear, CSL. Aristocrat Leisure's always been one of the bigger growth companies in the top 100, and Seek is in there as well, and Guzman and Gomez are in there. But if you take that list, that's a fabulous list of growth stocks. You won't ever pick up on any of those by saying, oh, it's on a cheap PE and a high yield. They'll never turn up. You'll never see a value fund manager buying them. You'll see people dismissing them because they don't look cheap. But you've got to look deeper than that. You've got to look to revenue. You've got to look to revenue growth and the fact that they are building a business in the long term. By definition, that is a growth company. Go to the newsletter. More in there. Hi, I'm Marcus Padley from Marcus Today. I've been in the stock market, well, forever really, well, since 1982 actually. And I've been a broker for many of those years, stockbroker, dealing with a lot of self-directed investors. And I've also been writing for self-directed investors in the Marcus Today newsletter for the last 26 years or so. And I was recently asked by one of my great friends actually, how, Marcus, do I look after my own retirement? Do I need to know all about the stock market? How do I do it? I'm a little bit scared of doing it. I want to take some control, but nobody's teaching me how to do it. So this is a little course for you, just 5 videos to get you started on how to take control of your retirement and how to do what all the Marcus Today members do, which is self-directed investment. How do you do that? How do you retire? And we're going to start with a video on how much do you need to retire.